हम सीधे रुख करना चाहेंगे इस वक्त आरबीआई के गवर्नर रघुराम राजन जो हैं पत्रकारों से बात कर रहे हैं।
RBI in the act is to ensure the flow of credit to productive sectors of the economy. In this context, we need to reduce the requirement for banks to invest in government securities in a calibrated way to what is strictly needed from a prudential perspective. This cannot be done overnight, of course. As government finances improve, the scope for such reduction will increase. Furthermore, as the penetration of other financial institutions, such as pension funds and insurance companies, increase, we can reduce the need for regular commercial banks to invest in government securities. We also subject our banks to a variety of priority sector lending requirements. I believe there's a role for such a mandate in a developing country. It is useful to nudge the banks into areas they would not otherwise venture into. But that mandate should adjust to the needs of the economy and should be executed in the most efficient way possible. Let us remember that the goal is greater financial access to all parts of the country rather than meeting some bureaucratic norms. I'm asking Dr. Nachiket Moore to head a committee that will assess every aspect of our approach to financial inclusion to suggest the way forward. In these ways, we will further the development mission of the RBI. Some see financial markets as competition to banks. They are that, but they're also complementary. Too many risks in the Indian economy gravitate towards commercial banks, even when they should be absorbed by arm's-length financial markets. For our financial markets to play their necessary roles of providing risk-absorbing long-term finance and of generating information about investment opportunities, they have to have depth. We cannot create depth by banning position-taking or mandating trading based only on well-defined legitimate needs. Money is fungible, so such bans get subverted, but at some level all investment is an act of faith and of risk-taking. Better that investors take positions domestically and provide depth and profits to our economy than they take our markets to foreign shores. So together with the government and regulators such as SEBI, we will steadily but surely liberalize our markets, as well as restrictions on investment and position-taking. Given the current market turmoil, our actions will be at a measured pace, but as a symbolic down payment, we will do the following. First, presently exporters are permitted to rebook cancelled forward exchange contracts to the extent of 25% of the value of cancelled contracts. This facility is not available for importers. To enable exporters and importers greater flexibility in their risk management, we will 1. Enhance the limit available to exporters to 50%, and 2. Allow a similar facility to importers to the extent of 25%. We want to make payments anywhere, anytime a reality. Third, only banks are currently allowed to deploy point-of-sale terminals, and these are largely set up by a few banks in urban areas. As announced in the annual monetary policy statement, we will facilitate the setting up of white point-of-sale devices and mini ATMs by non-bank entities to cover the country so as to improve access to financial services in rural and remote areas. Fourth, currently holders of prepaid instruments issued by non-bank entities are not allowed to withdraw cash from outstanding balances in their prepaid cards or electronic wallets. Given the vast potential for such instruments in meeting payments and remittance needs in remote areas, we intend to conduct a pilot enabling cash payments using such instruments and Aadhaar-based identification. Finally, there is incredible potential for mobile-based payments. We will set up a technical committee to examine the feasibility of using encrypted SMS-based funds transfer using an application that can run on any type of handset. We will also work to get banks and mobile companies to cooperate together in rolling out mobile payments. Mobile payments can be a game changer both in the financial sector as well as for mobile companies. This, in short, is my short-term timetable for the Reserve Bank. It involves considerable change, and change is risky. But as India develops, not changing is even riskier. We have to keep what is good about our system, of which there's a tremendous amount, even while acting differently where warranted.